Hey guys, this video is about a simple forex strategy that will help you trade any market structure easily. The best thing is that you will see this market structure almost every day, no matter which time frame you're using, and it's really important for beginners or anyone else who's struggling with consistency in forex. So let's start the video. I'm Neha from Eagle Eye Forex and welcome back again. So to recap, in this video you'll learn a simple strategy based on price action. It will include how to trade common market structure that you see almost every day, but you're not sure how to trade them, or you messed up with the entry, stop loss and target profits. We'll be discussing all of these, so just stick to the video. So what's price action in simple words? Price action in simple words is the trading methodology in which we trade based on action of price or changes of the actual price movements rather than using any technical indicator. We use naked charts to make trading decisions, just like profit targets, stop losses or entry points. For this strategy, I'm using pound yen 1 hour chart because I only trade GJ and gold, so I have some sort of idea that how these pairs moves when they are volatile, when I'll get the most volume and some more fundamentals. But you can use any currency pair as long as you're familiar with the fundamentals of that pair. The price action works with every pair and all the time frames. If you are still confused about the time frames, don't panic. There's a detailed video on time frames on my channel. I dropped the link in the description as well. So moving on, if you try to recall, the market doesn't move straight up or straight down, neither is trending to the upside or downside all the time, right? So it's kind of hard to catch the trends or trading the trends, especially for the beginners. So today's simple strategy is trading the trend reversal. We'll not be trading the trends, but we'll be looking for trend reversal before they actually happen. In this particular example, I'll tell you how could you have traded this reversal before it really happened. Where could you have entered, and the best ways to place stop loss and target profits just by using simple price action. And that means we'll only be trading naked charts, no indicators, no rocket science, just simple price action based on recent price movements. To learn this strategy, you need to understand some basic market structures, some common chart formations that you see on the daily basis. The market doesn't move like this or this. Rather, what happens is that sometimes the market is making high highs and high lows, forming an uptrend, or the price is making low highs and low lows, forming a downtrend. Now, my beginner friends will ask, why don't we just say higher highs make uptrends and lower lows make downtrends? So the reason behind this idea is that if you look carefully, the new highs are formed above the previous high. Just like this high is a bit higher than that, and this one high is also higher than the previous one. Along with the high points, if you notice, the lows are also getting higher and higher. Just like this low is higher than the previous one, and this low is higher than the previous low point. So we call it a higher low. Now this series indicates that buyers are in control, pushing the price to the upside, forming into an uptrend market structure. To summarize, the uptrend is simply the series of higher highs and higher lows. Now the exact opposite is the downtrend, that is series of low highs and lower lows. Now if you notice, each low is created below the previous low, while the highs are also below the previous highs, getting lower and lower, making series of lower highs and lower lows, which means the sellers are in control and they are pushing price to the downside, forming into a downtrend market structure. So the downtrend is simply lower highs and lower lows, but the market isn't always trending in an uptrend or a downtrend. Most of the times you will see it moving like this, up down up down. The lows are at the same point and highs are also residing at the same level. So we call it a range or consolidation phase in trading terms. This ranging market structure indicates a reversal. Either it breaks to the upside or downside, or it may continue to range, but at the end of the day the market will definitely come out of this phase, and that would be your best trading opportunity. Because for suppose after a consolidation the market breaks to the upside, it means buyers are in control and there's more pressure from the buyers to move the price higher. So with the high volume and volatility, you can grab some nice moves, and that's the reason most of the successful traders wait for hours hours or days or some weeks to grab the potential opportunities, because it's not how many trades you take, but it is how much money you made, how many winning trades you made. I hope the basics are clear. Now moving on to the strategy. The strategy is to spot the trend reversal of an existing trend. Just like this example, if we recall, this is the downtrend, the lower highs and lower lows. Now we have to wait for the potential trend reversal so that we can enter buying position. Now how can we predict the reversal before it actually happens? So for that, the first thing to look for a reversal is the trend weakness. The weakness is a sign that the trend is likely to reverse. In this example, here the series of lower highs and lower lows were indicating a strong downtrend. But here this low isn't necessarily lower than the previous low, so we can conclude that this is a sign of a trend weakness because this is no longer a lower low. In 90% of times you'll see this weakness turning into a potential trend reversal, but this is not enough confirmation because you're not sure where should be the entry, the stop loss, or the target profits, or there might be a trend continuation after this low. Stick to the video and I'm gonna tell you the exact entry, stop loss and target profits. You cannot take entry after spotting the weakness of the trend here at this level, but you will wait for the reversal signal or a reversal pattern, which is head and shoulders pattern. In this example, it is the most common and useful reversal pattern. Basically, it consists of a left shoulder, the head, and the right shoulder. The line that connects them is called a neckline. The two shoulders are below the head in case of normal head and shoulder pattern, and in case of inverted or upside down head and shoulder pattern, the two shoulders should be above the head. So here in this example, this is an inverted pattern. Here's the left shoulder, the head, and the right shoulder. This is the neckline. Now there are two ways to take entry. The first method is to enter at the break of this neckline of head and shoulder patterns. So just simply enter position and the stop loss would be below the shoulder, because it's important to be prepared for any situation. After all, it is forex market and there's still some chances that the idea may not work, so stop loss is necessary. The second method is a bit advanced. What you would do is that instead of buying here at the break of the neckline, we'll wait for the retest of this level, and then once the price pullbacks starts rejecting this level, we can open up our position. In simple words, the break and the retest of neckline is your entry target. Alright, so now the entry is done, the stop loss is set. What about the profit target? It's really important to find out the appropriate exit of your trade, but unfortunately the beginners ignore this point most of the times, which makes their winning trades into losing ones, and this is one of the reasons 95% of traders lose money. Anyways, I'll tell you two ways to set your potential exit points. One way to set target profit is to use risk to reward ratios. 1-to-2 ratio is widely used in forex market. Now if you say, for suppose you are risking $100 for a trade with the 1-to-2 risk to reward ratio, now if you lose the trade, you will be losing $100 and your gains will be twice the risk, which will be $200. Another way of setting potential target profits is finding previous key levels to the left side and then set it accordingly. I usually close partial targets. That means, for suppose if I set my target profits here, I'd close 50% of my positions here, and then I might close another 30% or maybe full position here. Closing partials will help you become a disciplined and a consistent trader. So if you recall this simple strategy, first you need to spot the trend and the weakness of the trend, which was the higher low formation in this example. Then wait for the trend reversal pattern or the head and shoulder pattern. And after that, you can take your entry either at the break of the reversal pattern or using break and retrace strategy. You will get to see this type of a structure almost every day in forex market, and with the right price action technique, you can trade naked charts with ease. Spotting potential opportunities will be so easy with the right trade plan and patience. Patience is the key to become a profitable trader. Most of the successful traders wait for several days or weeks for the correct entry setup, so you're not alone struggling with this problem. Another important thing that most of the beginners and some experienced traders forget is having a trade plan. Trade plan is just like a roadmap. You know where you're going and where you have to stop. In trading, a written trade plan will help you stick to the purpose. For suppose your goal is 10 pips a day, you will only focus on gaining those 10 pips only. If you don't have a trade plan, you won't be able to limit yourself. Either you will be over trading or trading against your strategy. So just grab a piece of paper and write it down, whatever your plan is. If you are new to my YouTube channel, please do subscribe and hit the bell icon. Around 95% of the viewers are not subscribed to my channel, which is really unfair. Well, as the video is about to end, I'm really excited to announce that we have started managing Forex accounts. In case you don't have enough time to trade yourself or you are still learning, you can now invest with Eagle Eye Forex. For further information, contact us on Instagram and get ready to become rich. So yeah, I hope you guys understand the basics of price action. We'll talk about some more price action techniques and structures in upcoming videos. If you have any confusion, you can ask me in the comments down below, and you can also tell me what you want to learn next. I'll surely try to make a video on your suggestions. Until next time, keep trading and keep practicing. Thanks for watching.